Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the TGI. Thank God it's Friday, the 25th of October, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go through our usual regular run through in here today. We're going to take a look at the calendars, what we've had, what we've got coming up. We'll take a look at some articles from the major news wires. What are the financial markets being affected by? What are those geopolitical, fundamental, macroeconomic factors that are influencing the financial markets that you guys are trading? And then we'll take a look into some of the charts and just look at what's going on in the charts. The technical analysis reports. Remember, the technical analysis reports are available below where you are looking right now. If you're watching this live or on the playback, in the Trade Day members area. On the left-hand column, we have the technical analysis reports. The middle column, the weekly macro matters and the weekly recap and update that we publish at the weekends. And then we have what else do we have? What else do we have for you? Then we also have the news section from Live Squawk. So yeah, take a look at that below where we are. First calendar I want to start with is just to point out we're going into the blackout period for the November Fed meeting. So the November Fed meeting, remember, the Fed meetings are always Tuesday, Wednesdays, okay? Pretty much always Tuesday, Wednesdays. And with the announcement on the Wednesday. We have the Fed meeting in November is on the Wednesday, Thursday, you see. I'm not 100% sure. Actually, does it say it down here anywhere? There's no little notes to say, but I'm pretty sure that is due to the US presidential election. Okay, so the US presidential election. So we have the blackout period starts a week and a half before the actual meetings. So we get it kicking in from Saturday. So from tomorrow. So a week and a half ahead of the 6th and 7th is October 26th, which is tomorrow. So today, the last day for any Fed speaker. So the next, up until the election, and then post-election up through the meeting, we will have no Fed speakers. So that's one thing to say. The other thing I wanted to say on the calendar front is that we get UK daylight savings time in here. 2024. It kicks in this weekend. So you see in here, Sunday the 27th of October. I'm going to just check on the EU. Yep, same as in the EU. Now, I can't go around everywhere in the world, right, guys? But US and Canada don't roll theirs until, I think it's 2 weeks' time. 1 week's time. So we have 1 week. So next week only, definitely for if you're in the UK and Europe, there is going to be a different time gap. So please be aware of that for the closes, guys. You have to be aware of the closes. We will put an email out. I'll try and get one out today, if not tomorrow, reminding you. But please remember, if you're in the UK and Europe, and I don't know, but I think for a lot of the rest of the planet, yeah. So if you are in if you're in Africa, I think you're in the Middle East. I don't know. I can't be an expert on time zones around the world, right? That's not what I do. But I'm pretty sure that there is 1 week where the time difference now is an hour narrower. Okay, so for example, in the UK, from London time through to New York time, for most of the year, there's a 5-hour time difference. Next week, it'll only be a 4-hour time difference. So you have to know that about when the market's open, when the data comes out, if we have any tier 1 data now, which we do have next week. We have the US employment report next Friday. And then you need to take into consideration the closes, particularly because obviously you have to be out, no open positions by the close. So please do bear all of this in mind in here, guys. Okay, it's important. So next week for the US does not change until the US, you can see in here, changes on Sunday the 3rd of November. but for the UK and Europe, and I think for many other global time zones, we move out of daylight saving times back into normal time, as it were, and that will mean a difference by 1 hour in the time difference between the UK, Europe, and the US, and I think for much of the rest of the world and the US. Okay, so please be aware of that, guys. Okay, so what else do I have for you in here? We also have the calendars. So the macro calendar looking into today. Let me just duplicate this and we'll look back to yesterday's calendar as well. I know Duncan would have covered this with you yesterday, but yesterday we did get all the PMI data. Okay, the global flash. Remember, this is the flash PMI. You see the little P here on the end. That little P is preliminary. Okay, so it's what we call flash PMI. Why is it flash? Because it's an early piece of data. The S&P Global / HCOB. When they pull in all this data, they get about 80+% of the respondents in, and then once they get 80%, it's usually the Thursday before the last Thursday of the month. They then publish this HCOB S&P flash PMI data. So this gives us a heads up of what the final PMI data. Final PMI data generally comes out at the very beginning of the month on the 1st and the 3rd, usually, depending if they're not a weekend. So, and we don't get this from the ISM, remember. The ISM is separate. The ISM, the Institute of Supply Management. The ISM data for the US is a more important piece of data, but they don't publish the flash PMI data, okay? They're only going to get that from S&P Global. So if you look in here, what we saw, so the French data worse than expected, German data and the Eurozone as a whole data better than expected, UK data worse than expected, so a real mixed bag. And if we scroll down to the US data, slightly better than expected. Not much in it, to be quite honest. We were on the manufacturing side, 47.8, expectations of 47.5, 55.3 versus 55 on services. So not much in it, really. So, there wasn't too much from that yesterday. Looking into the day, it's a relatively light calendar. Yes, we do get stuff. We've already had the German IFO business climate data in here from Germany. That's important set of data for Germany. Remember, Germany, the powerhouse of Europe, in here, and slightly better than expected. So that's definitely a positive. In just under 1 hour, 53 minutes time, we get the durable goods data for the US. Preliminary data here as well for the month of September. Month-on-month data, we're watching out for that. That can move markets, so keeping an eye on that durable goods data that we do, durable goods orders data that we have coming up in 53 minutes. And then a little later, at 10 o'clock Eastern time, we get Michigan consumer sentiment, so watching out for that as well. And then that rounds off the week, and then as I say, we go into the Fed blackout period. So it's going to be lighter next week. Main macro data point next week as we go into the end of the month, and then we turn into the month after is on Friday. It's Friday the 1st, and I'm pretty sure we get the US employment report. So we get that next week. That's definitely something to watch for. More importantly, and not importantly today in here, we've got yesterday's in here. It wasn't particularly big data in here on the micro data, on the economic earnings reports in here that we got in here, the earnings reports from the major companies, company earnings reports. No one really huge in here, so it's going to affect the major indices. If we look into the day, it's a similar story, and we've had them all out already. The bigger ones in here, and none of these are really going to impact the major indices. However, next week we go into a really critical phase. Okay, so we've had only Tesla, which obviously leapt about 20% yesterday after we had the strong numbers and guidance in here from Tesla on Wednesday night after the bell. So Tesla up, I think 15 to 20%, 20% yesterday, I think it was. Tesla was up. So lifting the major indices back higher, they obviously sold off on the Wednesday. So lifting those major indices back higher with that positive Tesla. They were the first, I think, of the FANG stocks. Let's forget the FANG stocks. We're not really concentrating on FANGs now. It's now all about the Magnificent Seven. So the Magnificent Seven stocks, they were the first of the Magnificent Seven to report. Oh, no, we had Netflix as well, right? So we had Netflix and we already had Netflix and we've had Tesla. Next week, we really get the big boys, though. So on Tuesday, we get Alphabet / Google next Tuesday. Wednesday, Microsoft and Meta. Next Wednesday, moving forward through Thursday, Apple and Amazon. Okay, so we've got 1, 2, how many is that? 3, 4, for 5 of those magnificent 7, okay, reporting up. And then the one that's not in there at the moment is the one that is actually going to be out further into November. They always report quite late in the earnings season. Is going to be Nvidia, is the other one we're going to be watching for. Okay, so we've got some real big names, and to the point that the markets have not really got much focus in here at the moment. In the very short term, the really big focus is going to be obviously as well on the geopolitical side. So Harris and Trump make most of swing state blitz. So going around, obviously as we run into the election, counting down to the election now. So that's going to be significant. Nothing much else in here on the overnights really. If we look in here from Bloomberg's American briefing, and on the European briefing, they're focusing on central bank officials debate the size of the rate cuts in here. So a slew of ECB has talked about where they see borrowing costs headed. Some still discussions going on rate cuts to come from the ECB. But it shows how so US stock futures trim will it drop. So we are slightly low, but it is slightly low. We've kind of been in a range. We dropped on Wednesday, rebounded yesterday, slightly more positive running into today in here, and treasury yields 10% higher in the week, but they are moving back to slightly lower yields in here. We've been tracking those treasury yields going higher. And the other things that so look, morning bid. So this is for today from Reuters, right? But they're talking about mega cap earnings loom. So they're already looking to next week. Japan decides. That's again looking into next week. Okay. So and look, here's the pop-outs here. Look, Take 5 ready for an action-packed week. So it's Fridays. Their outlook for today is not even looking to the day. So today's going to be. I think it's fairly quiet day. I think we have continued yesterday's rebound back up into those ranges. And then again, looking here on the morning bid in here. Morning big mega cap earnings loom. Japan decides. This is not this week. This is looking into next week. So on the overnights, what do we have? A small dip, 0.6 lower in here on the Nikkei, and 0.5% up on the Hang Seng. European exchanges in here lower this morning, but not much in it really. The UK FTSE down about 0.25%, just over 1/10 on the German DAX, and about 1/3% on the French CAC index. And on the overnights in here, we can see a slight nudge higher. Nasdaq and the S&P up about 0.15 in here. So not much in it going into today. A quick nod to the Fed Watch tool in here. Just for November and December in here. November's nailed on now for a 25 basis point cut, and likely for another one in here, but still potentially not a second rate cut into year end. But the likelihood is we get 2 rate cuts now in November and December. But if we look out now to the end of Q1, so March, okay. So remember, there's 4 meetings between now and this one at the end. So we've got the November, December, January, and March meetings, okay. 4 meetings in here. And this in here, 475,500 is current, and this is the chances of a 375 to 400. So this is the chances of the Fed staying with 25, 25, 25, 25 through those 4 meetings. So there's only a 40% chance that they go at every meeting. So the market's now pricing in here, so 41% chance. So it's basically pricing in a 59% chance that at some point in the next 4 meetings, the Fed pauses, okay, and it stops its rate cutting, okay. So that's quite interesting as well. So we're already looking for a potential pause to come into the next quarter. Yields, as I said in here, having pushed significantly higher through this week, have been climbing higher all the way since late September, early October. Slightly backing lower in yields yesterday and this morning, which have helped the outlook for stocks in here. So here's their US fixed income report in here. You can download this, as I say, just below where you are right now if you're watching this in the members area. So we have had a slight tick back up higher in price. That's lower in yield, remember, across the curve. So 30s, 10s, 5s and 2s, and 2s hardly nudging back higher at all. And the outlook's still very bearish. That's lower prices, higher yields. But on the stock indices, despite the chopping in here, so the chopping now, which we chopped yesterday down below this trend line support in here, and we've now got more of a negative outlook in here on the S&P, with that support being broken, a significant move lower yesterday, but the uptrend in So it's got opportunistic shorts in here, but the uptrend still intact. The same uptrend from the Nasdaq, and the market obviously having rebound, so a slight upside bias. So it's kind of a discontinuity in here between the S&P and the Nasdaq on the technicals in here, with the S&P breaking support and the Nasdaq not breaking support. For today, though, I'm still kind of clinging on to a slight positive. I mean, and it's a slight positive. I mean, really, on this is the S&P. We've been kind of trapped in a 59, like 10 down to like 59, 58, 52 kind of range. And then we had that spike down below it on Wednesday. Down for a look here. This blue line is the 13-period EMA. It's a really good a monitor of short to intermediate term trend. And you can see back here, we kind of flirted with it and then pushed back away from it. And we're back flirting with it back on Wednesday. And then yesterday, we kind of eked back up just to close right on that 13-period EMA. And today, we're back above it. So for me, I think the risk is back up into that kind of higher range that we were locked into. So that higher range was like 58.50 up to like, 59.20 kind of area. I think the risk is we push back up into that range. So I think targeting back towards 58.80, maybe 59.00 in it today. And it's a similar story for the Nasdaq in here. So again, breaking down. So you can see flirting back here previously with the 13-period EMA, chopping below it and then back above it. And then more recently, and then on Wednesday, significantly down through it, rebounded after those Tesla numbers, remember, and then yesterday pushing higher and then back above that 13-period EMA. So again, before we had that spike lower on Wednesday, the Nasdaq was kind of sitting in a 2250 up to 20 kind of 650 kind of range, and now I think the risk is we push back up into that range in here. So we're back within that range now, having spiked below it on Wednesday, and I think the risk today is we move back towards like the 2550, 2600 kind of area going into today. So that's my take. I'm going to wish you all a great trading day. Please remember the clocks change in much of the world. I can tell you they're definitely changing in the UK and EU this weekend. We're going to have that 1 hour difference. We'll try to get an email out on that today or over the weekend to remind you guys, because it's going to be important for the close. It's going to be important for the most important for the closes, guys, but also for the data, and particularly for our tier 1 data. Remember, next Friday, and then also then for the opens, you want to be on the open. You want to be on when the data comes. Know when the data comes out, and you have to be aware of when the close is. It's because it's not changing in US time. It's only for 1 week, but it's 1 week, so you need to take that into consideration. Right, guys. Regarding the software, the update we did last weekend, most of the little minor issues that we had with graduating people into the funded sim, funded live accounts, that's all been taken care of. So there's very few bugs in here. There's some very, very minor things going on still, but most of that's behind us, and that sets us up for a platform to push onwards and upwards with product development and new features for you guys, you Trade Day members going forward. All right, guys, I'm going to wrap it up there. So have a great trading day. Have a great rest of the day. Have a great weekend, and we'll be back with you on Monday for another Bull versus Bear webinar. Bye.